What's shaking, tech enthusiasts? The news cycle is moving at warp speed, and you're about to get the inside scoop on the biggest shifts happening right now. Get ready for a rapid-fire update that you absolutely cannot afford to miss. We're diving deep into developments that are reshaping industries and impacting the future. From massive government investments to strategic shakeups, we've got it all covered. First up, a colossal government deal is sending shockwaves through the tech world, injecting billions into a key player and raising big questions about the future of domestic manufacturing. What does this unprecedented investment mean for innovation and global competitiveness? Then, we're cutting through the noise to break down exactly what this major government intervention means on the ground. We'll unpack the fine print of new requirements, or rather, the asterisk lack of them, and explore how this redefines the landscape for a semiconductor giant. Next, we zoom in on the implications for a specific region deeply connected to this tech titan. We'll explore how this federal backing is viewed by local leaders and businesses, examining both the potential economic boosts and the underlying concerns about market interference. And finally, we're turning our attention to a key competitor in this high-stakes arena. While one company gets a massive government boost, what does this mean for its closest rival? We'll analyze the market reaction and explore why this might actually be a strategic advantage for another industry player. Stick around, you won't want to miss this. Make sure you're subscribed and the notification bell is on so you never miss an update. A historic government investment shakes up tech. This development marks a significant moment where governmental power and free enterprise converge, as the U.S. administration takes a substantial stake in a major chipmaker. This move, valued at a staggering $5.7 billion, is part of a broader strategy to bolster domestic semiconductor manufacturing and secure America's position in a critical global industry. The deal, which grants the government a notable ownership percentage, is poised to reshape the future of U.S. chip production. The infusion of federal capital is intended to accelerate innovation and expand manufacturing capabilities within the United States, aiming to reduce reliance on foreign supply chains. This strategic partnership is seen by proponents as essential for national economic and military security, ensuring that the U.S. remains at the forefront of advanced technology. The investment is expected to fuel ambitious fabrication projects and create a ripple effect across the technological ecosystem. Specifically, the funding is earmarked for projects that align with national strategic goals, focusing on advanced manufacturing processes and the development of secure semiconductor technologies. This initiative reflects a larger trend of governments worldwide actively supporting their domestic industries to gain a competitive edge. The semiconductor sector, vital for everything from advanced computing to national defense, is a key battleground in this global technological race. The agreement also involves adjustments to previous terms, such as the relaxation of certain reporting requirements and milestone adherence, allowing the company to benefit from the funding more fluidly, provided it demonstrates significant expenditure on agreed-upon projects. This flexibility aims to streamline the deployment of capital and expedite the achievement of strategic objectives. The company has already reported substantial investment in eligible projects, meeting a key threshold for receiving the government's financial support. This unprecedented governmental involvement raises crucial questions about the balance between public investment and private enterprise. While the direct financial injection is substantial, the long-term implications for market dynamics, competition, and national industrial policy are profound. The success of this venture could set a precedent for future government interventions in strategic industries, influencing how innovation is fostered and how national technological sovereignty is maintained. Hold on tight, because the implications of this massive deal are far-reaching. Next, we'll break down exactly what this government stake means in terms of operational requirements and strategic flexibility for the company involved. CHIPS Act flexibility, a new era for Intel. The U.S. government's recent decision to take a direct stake in Intel has led to a significant recalibration of the terms and conditions previously set forth under the CHIPS Act. This strategic shift means that Intel is no longer bound by several of the original requirements and milestone obligations that were part of the initial agreement. This move is a direct consequence of the government's decision to invest directly in the company, altering the nature of their partnership. According to Intel's own filings, the company can now access government funding as long as it can demonstrate that it has already allocated a substantial amount, specifically $7.9 billion, towards projects that were initially agreed upon with the Commerce Department. This threshold is crucial for securing the allocated funds. Reports confirm that Intel has already made significant progress, having spent approximately $7.87 billion on eligible projects, thus meeting the primary financial commitment required. Furthermore, the revised agreement liberates Intel from certain financial obligations, such as sharing a percentage of its cumulative cash flow from each project with the Commerce Department. Additionally, the company is freed from adhering to some of the CHIPS Act's workflow policy requirements and various other restrictions that were previously in place. This relaxation of regulatory oversight is designed to provide Intel with greater operational freedom and flexibility. However, it's important to note that these new terms do not permit Intel to use the government funds for activities like distributing dividends to shareholders or repurchasing its own stock. These restrictions ensure that the government's investment is channeled towards bolstering manufacturing capabilities and technological advancement, rather than directly benefiting shareholders through capital returns. The backdrop to this agreement involves a notable interaction between President Donald Trump and Intel CEO Lip-Bu Tan. Following President Trump's public comments suggesting the CEO should resign, a meeting took place that ultimately resulted in the revised deal. President Trump highlighted the outcome, stating that the agreement secured a $10 billion investment from Intel for the United States. Intel subsequently confirmed that the U.S. government would indeed make an $8.9 billion investment in its common stock. This investment comprises the $5.7 billion previously allocated under the CHIPS Act, along with an additional $3.2 billion from the Secure Enclave program. Intel's CEO, David Zinsser, confirmed the receipt of the initial $5.7 billion. When combined with the $2.2 billion in grants previously awarded under the CHIPS Act, the total government involvement with Intel amounts to $11.1 billion. This shift in government requirements certainly changes the game for Intel. Now, let's explore how this federal backing is impacting a key region tied to Intel's operations. Arizona's stake in the semiconductor game, federal investment's local impact. The federal government's decision to acquire a 10% stake in Intel, a move valued at approximately $10 billion, is generating significant discussion, particularly in Arizona, a state with major Intel operations. This unprecedented level of government investment in a private semiconductor company is raising questions about its implications for free enterprise and the broader economy. Former Intel employee Alan Steinberg views the move as a potentially positive step for the future of U.S. semiconductor manufacturing. He argues that such government involvement is necessary to counter financial support provided by foreign governments to their own chip companies. Steinberg believes that maintaining a strong domestic semiconductor industry is crucial for America's economic and military future, suggesting that keeping advanced manufacturing in the U.S. is paramount. Much of Intel's future manufacturing is slated for its expansive Ocotillo campus in Chandler, Arizona. This facility is a hub for thousands of workers and is undergoing multi-billion-dollar fabrication projects. The hope, according to local entrepreneur and state treasurer candidate Nick Manser, is that this federal investment will translate into more job opportunities for Arizonans. However, Manser also expresses concerns, reflecting a common sentiment in the business community that favors free markets. He notes that while the government's 10% stake is described as passive, with no board seats or voting rights, companies often pay attention to the wishes of significant shareholders. Manser is skeptical about President Trump's ability to remain a passive investor, suggesting that the government's substantial ownership will inevitably influence Intel's decisions. Manser warns that if the government attempts to steer the company's direction, it could have negative consequences for Intel, the U.S. economy, and workers in Arizona. He also points out that this deal could set a concerning precedent, even if it proves beneficial in this specific instance. Senator Mark Kelly, who helped pass the CHIPS and Science Act, has also voiced concerns. He described the deal as setting a bad precedent, noting that the administration is using funds intended for grants to purchase the stake. Kelly emphasizes that the original goal of the CHIPS Act was to boost American microchip manufacturing, lower costs, and create jobs. He fears that this action might deter future investment in the U.S., undermining the bipartisan effort. Adding to the complexity, even with federal backing, Intel continues to implement workforce reductions. The company recently issued a WARN notice indicating potential layoffs for up to 97 workers in Arizona as part of ongoing restructuring. This regional analysis highlights the mixed reactions to the government's stake in Intel. Now, let's shift our focus to how this news is affecting a major competitor in the semiconductor industry. AMD stock's resilience amidst Intel's government boost. Following the U.S. government's announcement of a significant $5.7 billion investment in Intel, which grants Washington a 10% stake in the company, AMD's stock experienced a notable dip. This market reaction underscores the sensitivity of the chip sector to major policy shifts and government interventions. Traders quickly interpreted the news as a potential disadvantage for AMD, leading to a sell-off. AMD shares fell by more than 3% in the immediate aftermath of the announcement. Investors began to question AMD's competitive position, given the substantial government backing Intel received. This immediate response illustrates how closely the market watches government involvement in strategic industries, assessing who stands to gain and who might be left behind. However, the narrative for AMD remains robust, despite this short-term market fluctuation. The company has demonstrated consistent growth, with its most recent earnings report showcasing a year-over-year revenue increase of over 30%, reaching nearly $8 billion. This performance exceeded expectations and highlighted the sustained demand for AMD's products. AMD is aggressively expanding its presence in key growth areas such as server chips, graphics processing units, GPUs, and artificial intelligence, AI. These are precisely the markets where Intel is also striving to enhance its capabilities. The company's performance figures suggest that AMD is not only keeping pace, but is actively closing the gap and solidifying its market share in these critical segments. While the government's investment in Intel might appear to be a direct blow to AMD, the semiconductor industry is not a zero-sum game. Increased investment in the overall chip supply chain, even for a competitor, can have positive spillover effects that benefit the entire sector. AMD's growth trajectory is primarily driven by its product innovation, operational execution, and competitive pricing strategies, factors that remain unaffected by Intel's new government backing. Historically, when Intel has faced challenges with timely product delivery, AMD has capitalized by gaining market share, demonstrating its ability to compete effectively against larger rivals. This underlying strength in product development and market strategy continues to be a key differentiator for AMD. Despite the recent stock dip, analysts maintain a largely positive outlook on AMD. A review of Wall Street ratings over the past 3 months reveals a strong consensus, with 25 buy ratings, 10 hold ratings, and 0 sell ratings. This analyst sentiment translates to a moderate buy consensus, with the average 12-month price target suggesting a potential upside of approximately 13.6%. This analysis shows that even with major industry shifts, opportunities can still arise. That's all the big news for today, but we'll be back with more essential updates soon. That was a whirlwind tour of the latest tech news. We saw a massive government investment in Intel, a relaxation of CHIPS Act requirements for the company, the local impact of this deal in Arizona, and how AMD is positioned to thrive despite the competition. Don't miss out on future updates. Hit that like button, subscribe to Qualcomm Pulse, ring the notification bell, and drop your thoughts in the comments below. And make sure to follow us on all social platforms for even more insights.